All right, welcome back to the channel, Crypto Trend Trader with that Sunday market outlook. Just looking forward this week in the markets. Quite a bit of action here. So very exciting, very exciting. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It's obviously not financial advice, but we're just going to run through a couple charts here and work our way down the lineup. So 10-year Treasury, obviously, this last week was a key area. We came down and we finally touched our diagonal support as well as our Fibonacci level. We would expect that area to hold. Obviously, the 145, 1.45% on the 10-year is crucial. We would expect to basically chop around here, bounce it, and then eventually get that move up to 2.1 essentially. The idea here being that we're going to see these rates rise regardless of what the Fed is trying to do. So we'll have to pay close attention and see how this week plays out. But, this is obviously like crucial area. Now, it is possible we just chop sideways. We don't have to push up or break down from here right now. But I think more than likely this is going to be enough support to push the price back to the upside. And, we are well above the 200 exponential and simple on the daily. We're now above the 377 and the 528 as well. We got the hard buy signal coming out of the bearish control zone. A lot of things pointing in the upward direction. And then finally, this daily candle is extremely bullish right here as well. So, but doesn't just happen in one day or 1 week. DXY next, the dollar. Once again, at a crucial area right here. We're basically at what we would expect to hold as support if we're going to continue our higher low trajectory. So we have a low right here, a high, a higher low, a higher high. And now we need, obviously, to continue that trajectory, a higher low here as well, which if we sell off any more than where we're at right now, basically, on more than a daily, we're going to start compromising this low right here. Now, it doesn't mean that the whole trend's in jeopardy, but it's basically the second to last step. Last step is taking out this low right here. So, it's starting to look more and more like a hard rejection off the 200. And it kind of lines up also with, obviously, like the way the U.S. has been, like, just running that money printer nonstop. So we'll have to see how it plays out. It could easily find support here and continue to the upside. But at this point in time, it's looking like a confirmed breakdown from support in more ways than one. And it's very easy to think that this could just roll back over, come back down, and then we could just go deeper and deeper. So by no means does this have to be the bottom. Although if it did just turn around right now, we would be printing some bullish divergence and expect a powerful move to the upside. But as far as I'm concerned now, I'd be treating the support as resistance. All right, so let's get started here with the indexes, and then we'll move our way through and see if we can get onto the overall trend of the markets. Dow Jones making all-time highs, gaining strength, getting a hard buy signal. It is at the top of the range, but we basically had a bullish reset right here. Basically just cooled off the indicator oscillators, and now they're strengthening back to the upside. No reason to think that this is topping out. I expect continuation. SPY, same thing. Basically just went sideways, finding support at a key level. Reset off of the bullish control zone. And now we're starting to move back to the upside. All-time highs. No reason that we're not going to just continue on up. IXIC, NASDAQ Composite. Basically putting in a bullish ascending triangle. We've double topped here. We've got higher lows at the bottom. We're essentially bouncing that little diagonal trend line here. So, it's easy. We could come back down, fill the range out a little bit more. We could very easily come up to like that 14,150 and, get that breakthrough. But as far as I'm concerned, once again, bullish pattern, more often than not breaks to the upside. We're basically just chopping sideways, for these last few weeks while we just reset. So once again, no reason we're not going to see continuation. By far, I guess you can't even really say by far the worst, but technically the most bearish looking potential pattern playing out here, as we do have sort of like a head and shoulders on the Russell. But if we consolidate here, find support, there's a very bullish candle, nice green candle continuation afterwards. So, more than likely, it looks like we're respecting this trend line for support, and I would expect us to move back up. Once we take out this high right here, I would expect us to essentially like put the previous high in jeopardy, or threaten it at least, to get continuation to the upside. But at this point in time, we have a slight resistance here as well as our support right here. So we'll potentially come back up, run into some resistance again around this range. But, you know, if we take out this high right here, I expect we'll be taking out the all-time high and continuation. XLE, getting a nice powerful move off our little pattern break right here. Trade is playing out very nice so far, almost at the target, which is just that same high again. Which point in time, you know, it's just going to look like we're getting continuation to the upside, and that this was, in fact, our retest. You know, which would make me think that this is essentially like a 1, a 2, a 3. Potentially even the 3 will get continuation here. But, you know, that could even be like the pullback off of that. We'll have to see how it plays out. You know, this is obviously like relative, not that big of a pullback. You know, here it pulled back, came back up, and then sold off deeper. Here we found strength, and we're already threatening that high. So I would just expect continuation, you know, on this leg of the journey for XLE. Overall bullish for sure. ICLN, Clean Energy ETF. You know, this thing is basically like hanging out at the low. Bearish pattern, descending triangle. More than likely going to get the break, but could easily fill out a little bit more. But at this point in time, you know, looking at these key targets around $20 and like $17, somewhere around in there for potential. Let's just move right into tech here next. Tesla, TSLA, you know, just basically hanging out at the bottom of the range. Looks like we've essentially broken out of the bottom of this little ascending channel. Come back up, got rejected. So, you know, if this holds as resistance, I would expect essentially like a violent sell-off. And, you know, the measure move of the pattern would take us back down to retest those lows and retest our little buying area right here. We could easily see continuation, but, you know, I wouldn't put it past this. You know, basically back down in the bearish control zone at the bottom of the range. You know, I wouldn't just assume this is going to break down from here. We could very easily find support and get that continuation back up to the top of the range. Which point in time, you know, this long trade is going to look real good. You know, potential 8% drawdown if we take out that previous low, or 24% to the upside just to come and retest the top of the channel, not even the all-time high. You know, that's a nice risk-reward ratio, 3-to-1. Definitely has some potential in there. NEO, looking a little more bearish, descending triangle. Looks like it's going to probably just fill out this range a little longer, but eventually I would expect this to break. It is starting to show some bullish signs here, but we're kind of getting like a little contradiction here. I wouldn't expect anything too bullish out of these yet, but if we break the pattern, we could easily be retesting these all-time highs and no problem. Alibaba, same thing, you know, technically as Tesla, breaking down from that range, getting rejected. You know, once again, measure move on this one, take us down to like 175 from 225. But, you know, this could easily just push back up and fill out this range a little more. This green trend line is probably our most important trend line. So if we do break that, I do expect a violent and fast move. Baidu next. Baidu looking weak at the all-time, or a previous low rather. Retesting here. You know, just basically the ball getting ready to roll off the table. This was looking like an appetizing area initially, but after that weak response and then essentially just retesting it, you know, it could double bottom, could play out nicely. Again, the blue line here is a nice trend line that's been holding up price. We're almost at it now. If we break through that, though, could easily get a violent move to the downside. Apple looks a lot like Tesla now. Basically showed some strength, came back down, retested. You know, as long as this line holds right here, this is, you know, looks more like a buying area than a selling area, and we'll be back at all-time highs in no time. Overall, you would expect to bounce this area. You would expect like the Jewel Thief Stochs are coming down here at the bottom of the range. Looks like we're getting ready to bounce. I think Apple's got more upside potential. Pinterest next. Pinterest broke down from a key level here. You know, obviously that gap down was key. We obviously saw that coming with the top of the range here with that horrible looking candle. Finding some support at like the 200 exponential and simple, but technically we're below them. They pretty much have a flat slope right now. So, I mean, this thing could have some serious potential to the downside. Again, we reset the oscillators pretty well, but we are putting in lower lows and lower highs. So, you know, I don't want to get overly bullish on this just because it's coming down into the bearish control zone. But the last couple times, the last time it came down to those zones was in an overall bearish downtrend. So now after a long bullish uptrend, you would expect that's usually one of the best buying areas unless this is the trend flipping over. So it's either a really good entry or just the first of many. So we got to be careful because we did lose key support. We are below 200 exponential and simple. So, I got to keep a bearish neutral look on Pinterest for now. Etsy, once again, very aggressive breakdown from our pattern. Essentially just in the gap down, we basically got our measured move. This could very easily come back up and retest and fill that gap. But again, we're below 200 exponential and simple inside bearish control zone. Very weak looking. Overall bearish pattern forming. Looks bad. Zoom's just operating inside this channel. Still bouncing around. Rejected off the heart line. I very much expected to come back down here to the 377 and get that entry for our trade setup at like high 260s, low 270s. Again, bearish control zone has flashed a bunch of times through here. Bullish control zone once, and it was at the top of the trend. So I'm not too excited when I see this flash green because we're in an overall like consolidation or downtrend. So, if this started flipping back around and we started seeing more bullish control zone than bearish control zone, I might think twice about, that as an entry area, but still expect continuation to the downside. VanEck Semiconductor ETF. This looks pretty good overall, but we did lose a key trend line that most of the tech sector has been respecting. So the breakdown from that could easily be like continuation to the downside, but we could very easily just have this be a low, higher low, and then another higher low. And, it's just a little less strength, but still overall bullish uptrend. So a little more bullish than most of the charts we looked at so far. Peloton. We talked about this. I don't necessarily expect Peloton to lose another 60% of its value. It's already down substantially. It's already down over 50%. But there is now like recalls on the treadmill. People have literally died. Fundamentally and technically, Peloton is horrible right now. Looks terrible. Broke down from key support. Very clearly head and shoulders pattern right here. I'm staying way away from this thing anytime in the future. Not to mention the trendy nature of like exercise products. And then also like, the reopening trade, etc. So Walmart breaking out of this descending broadening wedge. Testing support multiple times here, consolidating. Looks pretty good overall. Looks like a lot of indecision though. But, you could very easily take, like I was talking about before, I could see taking a long off this area or taking a short off the gap fill up here, assuming it's going to break back down. Overall, I'm bullish on Walmart, so I'd rather be long than short in this thing. But, overall, flat to hedge now doesn't seem like a terrible idea, but this is a very clear technical break of the pattern, so I'd rather be long on this. Walmart looking good overall. I don't think it's going anywhere. People like Cheap and ARK, ARKK. This is the innovation fund. Looks terrible. New weekly close on this thing. We're at a key level here. But, this just looks absolutely horrendous. Looks like we're getting ready to just break down from this. And when we do, we're probably going to be, I would expect a retest initially of like $86. But I think 72 will be right around the corner. And as we see like more and more outflows come into Cathie Wood's funds, I think they're going to be in some trouble, at least in the short term. Medium term, as you start going out a few years though, I'm bullish on them overall. I think most of them, with the exception of like the space ETF, I think most of them are like very well thought out, and I like the overall trend, direction, and idea of them. Gold is still operating basically in that downtrend. But now we have officially broken out of the top of the channel, retested for support. We're getting strong move to the upside. The measure move would take us back up to 1750, which would essentially be a potential for a triple top and like the danger zone. But at this point in time, you could easily be paying attention to like this slightly lower area right at the 200 simple moving average, like 1850. But, we're starting to chew through all the resistance. And although there's like a bunch of key fib level, resistance, if we start moving to the upside and break through like this little trend top right here, I'm going to start getting real bullish on gold. And I look at the bullish like gold case scenario as being like months to years, like many months to years of bullishness as like inflation threats creep in. But I don't necessarily think that's going to be the case. But again, I could be wrong. We're at the top of the range. We're at a bunch of resistance. The indicator oscillators are getting pretty tired up here, so got to be real careful. Also, just looking at the longer time frame on the gold chart, this is a key level as well. We did get back above the 821. So if we stay up here basically this week, we could even come back down to like 1800 and we would still see a cross back to the upside. At which point in time, like our last confirmed cross to the upside on gold was, basically back here at 1223. And that was on December of 2018. So we got a nice long trend after that. So if we get a trend like this coming off the area we're at right now, the percentage gains and the length of time it lasts, I mean, we could be looking at like a few years and, maybe 50, 100%. I mean, it's not unrealistic to think we could see like a $3,600 to $2,000 gold in the next 2 or 3 years. Silver is just looks like it's just waiting on gold. It's trying to come up here and test some of these key levels, but silver has more of like a flat top on it. So really, silver's not looking any more bullish than gold until it gets above that $30 mark, at which point in time I think 36 and then 42 and then 50 and then 90. And I'm obviously extremely bullish on silver in the mid to long term. Short term is starting to look good too. Definitely starting to look good as well. XAU to XAG, gold silver ratio. We're very clearly in a downtrend on this. We have a couple different potential resistances. We sort of broke through this red one here, but we have another one coming in here. It's like a little less steep. So maybe we're starting to form like a rounded bottom on this, and we're going to get a move back to the upside. Maybe we're getting an actual break of the bearish pattern, and then we'll get a bullish retest of like key Fibonacci levels and ratio levels as high as 89, maybe even like that 81, 82 range. Right now, it's about 66 ounces of silver to 1 ounce of gold. We could easily just find weakness here again, though, and sell off, which would imply that silver is strengthening in relation to gold, which would imply that probably gold and silver are moving to the upside. So this chart right here kind of contradicts what the gold and silver chart are telling us, because if the gold and silver chart are getting ready to move to the upside, we would expect this to sell off heavily as silver tends to outperform gold. But we'll have to see. Sometimes gold will outperform in the beginning, and then silver would just like go parabolic towards the end. So we'll have to see. But I would expect this pattern to break out to the upside, which would mean that gold is getting more valuable in relation to silver, which again kind of contradicts the gold and silver chart are telling us. But we'll have to see. Platinum is inside a massive channel uptrend, and then inside of that we have another very clear channel uptrend. We're back at the top of the range, so we're either going to get a break and a burst up like another $100 on platinum, which would definitely be nice, or we're topping out here, we're going to come back down. But this thing has basically just been going sideways, resetting. Well, it's really just honestly a consolidation pattern, but I'm overall bullish on platinum to come back up to even with gold. Uranium, this is the URA ETF, breaking out here above key levels. Definitely looks extremely bullish. UEC, retesting those top levels as well. Again, looks very bullish, but I'm careful with some of this uranium stuff, as they have come far and fast, and these things tend to operate in like long time cycles. So when this does top out, it's not unrealistic to think we could see another like 1 or 2 years of sideways or down action. So I'm skeptical at these prices, but overall uranium looks good. USAS, American Gold and Silver Corporation. This is showing quite a bit of weakness, even though gold and silver are essentially at like the top of their patterns, breaking through resistance. This thing is almost at like the bottom of its pattern, but it did break out of like this descending resistance here, came down and retested it. So could very likely be getting ready to have a nice bullish move to the upside. Even just a move back to like some of this resistance and the top of the channel starts looking pretty juicy from these areas. Obviously, if we took out that low and broke out the bottom of the channel, that would be bad. That's still 16% down. Wouldn't have to see that much action before I would start getting bearish on this again. But 25% back to the upside of the channel. So I'd like to get a better entry than this, but we're already looking at almost a 2-to-1 trade risk reward on this one. But again, I'd rather wait for this to come back down and show a little more weakness and accumulate it closer to the bottom of the channel, like we talked about on this little break down here, or retest. you know, we're up near like the center of the channel, which typically I don't like to take trades in the middle of a range. SILJ finally got that weekly close outside of our key resistance. The previous like weekly tests up here, I'm on the daily now, but these were all hard rejections on the weekly. This was a very clear close outside of it. So, you know, I got to say that the SILJ is either ahead of the game, getting bullish too soon, or it's leading the march here. And, you know, I would expect silver, like spot markets, to just explode as well. Getting ready to get the cross to the upside, but the knife is all the way at the top of the range. Multiple green histograms above our slope line. So overall, SILJ looks good. Looks very powerful, like it's about to get some continuation to the upside. THCX, some of the pot stocks. This ETF, you know, we're hanging out at the bottom of the range. Looks rough, but we did put in a higher low here. We're getting the hard buy signal out of the bearish control zone. You know, I'm overly very bullish on the pot stocks, but we could easily have a little more downside, at least to retest 200 exponential and simple. So we're getting kind of mixed signals from a couple of these as well. Some look more bullish than the others. That's why the ETFs kind of help clear out a little bit of the static. So here's YOLO next. Again, looks like we're breaking out of this range, and I would expect continuation and a nice move to the upside, you know, with the 8% stop loss and 24%, you know, potential reward. We're looking at like a 3-to-1 risk reward. And matter of fact, we can get it from the level we're at now versus that $22 level where I first put this in place. So that's, you know, technically like better trade or more tempting. But overall, very bullish on these, but we got to see how this plays out. Again, they've come far and fast, but they're still way off their highs. And, you know, a lot of other commodities are going up, and the price of doing stuff is going up. And, you know, it's not unrealistic to think that the price of, you know, cannabis, you know, farming it, keeping it alive, you know, transporting it, selling it, it's not unrealistic to think that, you know, with the rest of the commodity markets, that these would go up as well. So here we got Tilray. Tilray, you know, this is my buy zone. Obviously, you guys have been paying attention. This is our bottom of our range, breaking down, still putting in lows. So I don't want to get too excited on this thing just yet. But, you know, we're very close to my desired entry. But my desired entry is still $12.50. We're at $16 now. So, you know, that's still another like potential like 25% drop, 30% drop into, you know, the best buying opportunities. Showing weakness on some of the indicator oscillators. But overall bullish on Tilray. But again, you know, I'd rather wait for it to show strength than just start picking the bottom and go upside down and waste a bunch of capital or a bunch of time. ACB, same thing. This is like the weakest of all the pot stocks, still below the 200 exponential and simple, getting rejected. You know, we'll have to see how this plays out. Once again, you know, this is our right shoulder for potential inverted head and shoulders and massive move back to the upside. Very bullish on this, but, you know, is it time to get bullish? Not quite yet. We could still have another drawdown. You know, we're at $9 right now. You know, I could easily see this thing come back down to like $5.75. So, you know, it could take another 30% haircut. But I'm definitely starting to dabble in some of these pot stocks. Caterpillar, so far, nice little move up here. You know, showing strength, top of the range, all-time highs. One of the best charts there is. You know, we are in like an ascending wedge. It's like almost a channel, but not quite. But very bullish over here. Just taking those buys off the bottom, sells off the top. If we do get a breakdown, you know, could get aggressive. But overall, fundamentally and technically, very bullish on Caterpillar. All right, so now what everybody's excited for, the crypto charts. XBT, Bitcoin on Kraken. You know, we've been consolidating at the top of this range now for months, showing strength, in my opinion, as we've, you know, these have been kind of oscillating around and everything. The weekly, though, has been like basically coming down, but price action is just hanging out sideways, and that's bullish to me. You know, we're basically at the top of the range, while we essentially like reset slightly down out of the bullish control zone. We did get the hard sell, hard buy, hard sell, exited multiple red histograms in a row. So this is technically weakness on the indicator oscillators, but we're above the 8 moving average. We're hanging out at all-time highs basically, and all the indicator oscillators are going down. So that to me is like a bullish consolidation or bullish reset. So maybe it takes a few more weeks. Maybe we oscillate inside this range a little more. But overall, it's so hard for me to try to get bullish on Bitcoin right now. You know, on the weekly, daily even looks strong. Crossed 8 and 21 back to the upside. You know, we're back inside the bullish control zone. The histogram is back over the slope. I mean, you know, we could be gaining strength now, getting ready for that breakout this week. So, and then looking at the Bitcoin chart on Bitstamp, a couple different indicators in place. Again, daily is showing strength coming off this, you know, essentially higher low off that previous low back here. You know, we're seeing more buying than selling, slightly at least. The volume is pretty low right here, but we did get the slope line flip back over blue and green volume. So we're starting to trend back now to the upside based on volume and price action. If we switch over to the weekly, we are still technically losing some of our momentum. You know, volume is very weak on the weekly up at these key levels. So, you know, essentially you would expect a little more buying or selling volume to come in. But, you know, essentially whatever volume spikes, whether it's buying or selling, is going to lead this trade in the next direction. You know, we hit all-time highs and highs on volumes basically back here, you know, at the same range we're at right now. We've had almost no volume coming in after that, just trailing off very weakly. And then also, you know, obviously we're losing some of the strength on the weekly for the on-balance volume, but we're still at the top of the range. And essentially this just looks like a bullish reset, because we could easily just start curving back to the upside, get a nice green, you know, buy volume comes in, and this thing just starts ripping back to the upside trending. Let me switch that back actually to the daily so I don't get confused there. Bitcoin futures chart next. You know, again, crossing the 821 back to the upside, just opened back up, slight gap up, but, you know, I still very much expect us to come fill this gap at like 62,000. Now at this point in time, it's only another 4,000 bucks. So it's not that much, but, you know, when we're talking about filling the gap back down here at like 48,000 up to 60,000, you know, 62,000, it's a much bigger deal, but getting a hard buy, multiple green histograms in a row, 821 cross to the upside. Looks like we basically front ran the 89 on this. Went the wrong way. Weekly, looks like we got our weekly 21 test, slight front run. We do have the sell buy sell signal. It looks like we're, you know, we are crossed to the downside still. It looks like we're getting ready to leave the bullish control zone. So I don't want to see us hang out here too long, but it's not unrealistic to think all of a sudden we could find strength, bounce the bottom of the bullish control zone, and then get continuation after like 4 weeks of like weakening, you know, histograms on the TJD TDMACD. But we're still above the 8. We've got 3 parabolic SAR reds in a row here. So I don't want to see like too many come in. The last time we got 3, we then just burst right through it. So maybe we burst through this one and flip it back over. But, you know, we could easily get a elongated consolidation and show a little more weakness, but stay in an overall bullish uptrend. But again, the weekly looks slightly less bullish. Daily starting to look like it's ready to rip again. Doge, you know, just like we said, essentially got that continuation, got that big push leading up to Saturday Night Live. Made it up to over 70 cents, new all-time high. You know, on a wick like 74 cents, and then literally sold off leading up to that. Has not gotten back up to there. It's now below the 821. They're crossed to the downside, showing weakness. Bounced the 89 on the, I'm on the 4-hour on accident. But you know, showing some weakness. The overall daily sold off pretty violently back to the 21, but got bought up. Again, though, overall looking sort of bearish, even though we're in a blue sky breakout. You know, a retest of like, we got the wick down and then bounced the top here, that support at like 40 cents. But it's not unrealistic to think this thing could kind of trail off, hang out, find some support, even get a wick lower than that. But I wouldn't want to see a close below 41 cents on the daily. I don't want to see that. I want to see it find support at this area, consolidate, and then just keep moving up, because that's basically what it's been doing. Now, is it possible that it just consolidates down here and goes down as low as 26 cents or something? Yeah, for sure. Definitely could come down there on a wick, but overall, you know, this is still like the overall like trendy, like FOMO trade for crypto. So I wouldn't expect that to change until it does. ADA, Cardano, all-time highs, trekking up here to $1.73. I would expect it to keep trekking up here. Tough to do any specific targets on Cardano, depending on what time frame we're looking at. If we want to do, I don't want to get anybody like overly bullish here, but if we just go from the previous swing all-time high down to the low of almost non-existent, what was it, like 1.5 pennies? we're just now getting into like the double top area that we just broke through. So if we get even just like a 1.236 fib extension, that's $3.50 Cardano. 1.5 is up here at $10, and the 1.618, $17.20. Do I think Cardano will get there? I don't know. Maybe. I mean, it's definitely, it's got a nice cult following to it. There's a lot of people on Charles's nuts. So, maybe Cardano goes up there. But in the meantime, overall bullish. Blue sky breakout. I would expect continuation, honestly. Basic attention token, just hanging out at the highs. It got up here as high as like $1.75. Came back down, getting back up to like $1.60. Putting in slightly lower highs here. Overall, doesn't look bad. But let me switch over to the daily. That's the 4 hour. Basically found support at a previous high. I would expect continuation. 821 cross back to the upside. We got the hard buy here. We are starting to lose the Stoch slope a little bit. The blue's coming down a little. But, could just run into a little resistance and then easily bounce it. Bunch of green histograms in a row. This is a key resistance area right here where we're at. But once again, if we just hang out here for a little bit, I expect continuation on basic attention token. Ethereum, all-time highs. Got a nice little push up over the weekend. In the bullish control zone, showing a little bit of weakness. Showing a little weakness here too for all-time highs. Definitely some, bearish divergence starting to play out. Easily could just invalidate it and keep creeping up here though. Key target 4,300. After that, it's like up in like the $10,000 range. Next like major target. So, but I mean, I would think like 4,300, 5,000. Then at that point in time, I mean, this thing's probably just gonna rip. I mean, not that it hasn't been already, but ETH to Bitcoin ratio. This one's interesting. We obviously broke out of key trending, like descending triangle, downtrend, etc. We've gotten like massive rips since then. We're definitely finding some key support and resistance on the Fibonacci levels along the way. We are at the 618 now. Finding some clear resistance there. So maybe it pulls back down to like the 0.5 or lower and ETH loses a bunch of value and Bitcoin just goes sideways, or maybe Bitcoin rips to the upside while, ETH just kind of goes sideways or goes down. Definitely a possibility. It's also possible that ETH just keeps ripping to the upside, but it's basically from the 236 back here, put in just a straight up parabolic move. So typically you'll see like one move up, two moves up, and then sometimes three, but you very rarely see 4 fib level bounce in a single move. So I would expect this to kind of show some weakness and come back down to like the 0.5, implying that ETH is going to lose value in relation to Bitcoin, or Bitcoin is going to gain value in relation to ETH. But again, this could just continue going straight up here. But we are finding resistance at a key level. So definitely keeping an eye on that. Riot Blockchain definitely just looks like shit. Broke down from a descending triangle, expecting massive move to the downside. I don't know how low this thing's going to go. It clearly had a premium built into it, and this is just the premium coming out because Bitcoin is not putting in lower lows, and this is putting in lower lows, implying that this is much, much weaker than Bitcoin, and it's just a Bitcoin mining company, so you would expect it to trade like at parity, roughly. MicroStrategy, fake ETF, again, extremely weak in relation to Bitcoin, but this is probably just a premium coming out. I mean, it's still down over 50% from the all-time high, and Bitcoin's basically hanging out at the all-time high. So this is obviously much shittier now in relation to Bitcoin's move, but at the same time, it was basically parabolic uptrend. It went up like 10 times. Bitcoin only went up like 6 times. So, this is just a premium coming out on a lot of this stuff. And, it's the same way with GBDC. And then Coinbase still looks like shit. Could easily get a pushback up to like, retest like 290, $300 even. But I would expect it to keep finding resistance. It's a bunch of red, a slight green, a bunch of red, a slight green, a bunch of red, a slight green. So makes me think there's going to be a bunch of red until we start seeing at least a daily move above the 8, above some of these previous resistance, start finding support. You can't even really look at like indicator oscillators on anything like other than maybe a 4 hour or shorter. but we are inside the bearish control zone. We are showing a little bit of strength. Maybe this thing bottoms out. If it was going to bottom out, this is the area to do it. 255 was our 2.618. After that, the 3.618 is down at 225. So at this point in time, it's sold off enough. I mean, it's already lost what from its IPO levels. Actually, that's not even the right spot. Really, it's a direct market listing. It's not an IPO, but basically this is down 20 something percent right now from where it direct listed at. So you could say that there's definitely some value in this right now to start potentially taking a position in Coinbase. We're at key level. 2.618 is a very strong level. But again, do you really want to try to catch a knife? Do you really want to pick the bottom, or do you just want to wait for it to show strength and get in, above 300 when it starts showing strength, rather than it going sideways to down and you just being stuck in it? So, and by you, I mean me. And obviously, just a reminder, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. All right, we just ripped through our assets there. Knocked that out of the park nice and quick. Good to see you guys. Bubblies, Tahid, what's up, guys? Yeah, Doge definitely was a buy the rumor, sell the news scenario. But that's, what we would expect, obviously. To everybody out there right now, make sure you smash up those likes. If you are not currently a member, make sure you join up, follow the channel, subscribe, all that good stuff. Feel free to share any videos or anything on social media. If you haven't used some of the resources that I offer to the community for free, highly recommend you go down in the details section, and you can see all my charts, indicators, everything for free to use. Obviously some great resources, and you get to follow along, obviously, in the videos as I typically use the same resources. Obviously, always sharing not only techniques, but also, how I use them specifically, and then, what I use to form my own trading plan to make sure that I'm always taking into account probability of success, risk reward of that success, and potential payouts, and then obviously, key position sizing, and then overall trading with the direction of the trend. I think with those 4 key principles, you really can't go wrong in most markets, especially not over time. But, obviously, again, not financial advice. I'm not your financial advisor. These markets are very volatile. There's a lot of risk right now. Obviously, a lot of things are overpriced, overvalued, overcosted, whatever you want to say. There's a lot of talk of bubbles, but it is very important to remember that, bubble can be easily recognized as a bubble and still just get bigger and bigger and bigger and, way longer than you ever thought was possible. So, it is very careful to try to call, got to be very careful not to be overly bearish and try to call the tops on these things. Because if you look at most of the people who are calling the tops right now on all these different markets, calling the dollar's going to die, all fiat currency is going to die, there's going to be a new world reserve order, the Fed's going to fail, yields are going to negative, gold is going to $1 million, Bitcoin is going to $1 million. All the people saying all these extreme views have been saying all these extreme views for a while. So they've either been right for a while, wrong for a while, or they're getting ready to be right for a while or wrong for a while. I think the most important thing that you can do is find people with a good head on their shoulders to help you learn, that will stay bearish when it's bullish and bullish when it's bearish, so that you can always keep a good head on your shoulders and you don't get caught up in the bubble mania, or vice versa. You don't get caught up in that capitulation mania. There was a lot of key crypto personalities that were swearing Bitcoin was going to go lower from 3,000, or Bitcoin was going to go lower from 20,000, or whatever. Same people that have been saying, same type of people that have been saying gold's going to $1 trillion, for years, and that this system's going to crash, or that real estate's in a bubble. These same people's videos pop up, and you could be watching a video from today or a video from 5 years ago, and it sounds exactly the same. It's doom and gloom, or, moonshots or whatever, but their attitude never changes. And the weird thing is all these markets go through bull trends, bear trends, and, they don't ever change your attitude. And, while that can be good at sometimes, it's very important that you can recognize once a market is shifting from bullish to bearish or bearish to bullish. Make sure you get out of the way so you don't just lose all the gains you made in a bull market, or accidentally sell into like a capitulation dump in a bear market. So but yeah, gonna keep it pretty fast today, trying to shorten these down a little bit, and just keep putting them out regularly. Missed out that buy at 28 cents on FTM. Oh man, that's rough. I mean, it happens though. Like I don't always leave like resting orders in the books, especially not unless they're like unlikely to get filled. So it's definitely gonna happen. You can't stare at the charts like 24/7 all day every day. So you're definitely gonna miss some trades, but as long as overall you see them, you take like the majority of them, or you recognize why that would have worked, even if you miss it, get into the next one. People that are always like getting like bearish or mad or sad or whatever because they missed this crypto run or didn't go all in, or missed this run in the stocks and didn't go all in, or real estate and didn't go all in. The smartest thing to do is make gains over time, to not get reckless and go all in. And that should obviously, like in my opinion, change as you get older. Like, you can be reckless when you're young and, afford to, you know, lose out a couple times, but you can't really afford it as you get older. You need to be less and less risk averse, and more and more about safety and protection. As where when you're young, you don't have much to lose and you got a long time to get it back. So you can be a little more reckless, you can be a little more crazy, but the truth is, you want to be learning always along the way. But the best time to learn is in the bear markets. Once it's a bull market, a bull trend, like especially like it is now, like the everything bubble, it's more just about like putting your money in the right places. But anywhere you're putting it, you're doing well, obviously. So do you use your trading style in Forex? Yeah, yeah. I mean, honestly, like, trend trading with the markets using like basically moving averages, Fibonacci's, stochastics, and MACD. That's like, and then coupled with like a couple volume indicators, it transfers to everything. So, you can use it in whatever you want. Typically what you see me doing technical analysis on though is the majority of like stuff that I'm either like investing in or trading. As it's the charts I look at regularly, unless it's like something somebody asks about. But the truth is, like in a crypto bull market though, there's not a lot of better places where you can have your investments than in crypto, because it just moves exponentially. Same way as where it's a bear market, I'm just trying to get out of the way of all cryptos. I'm not the type of person who's just gonna like hold a bunch of like shit coins through a bear market. I might start accumulating at key levels like once it's like pulled back and they're way undervalued and the market cap's just getting absolutely crushed. But I don't hold bags of, especially not shit coins. I don't mind holding something like Ethereum or Bitcoin. I don't mind holding like legitimate stocks or metals or whatever. But I'm not trying to hold like mining stocks or shit coins or whatever through bear markets. No, thank you. I really don't like drawdown. No, I mean not really, man. Not really. It's just not. It's not really my style. I mean, but I mean, you can obviously you can use the idea of like just the trending trades and the moving averages as like the basis for everything, is key because it transfers to everything. And then using like Fibonacci numbers as well is obviously crucial. But I'm not really a huge forex trader. I'm not really like huge into like options or any of that stuff. I mean, you can obviously branch out as much as you want. I'm not huge in real estate. I think everybody should diversify, and I think you should always like own your own home or property or whatever. But I just stick to what I know and what I enjoy the most. And the truth is like the more, since crypto's volatility and I really got like involved with it, the more and more I've gotten involved with it, I like the percentage moves that it has. And I really don't see, other than just trading something that's less volatile and using more leverage, like there's not a lot of reason to trade much other than crypto, other than like more of long-term trades and like diversifying your portfolio as opposed to just like scalping or whatever. But in a crypto bull market, man, there's not a lot of appeal to anything but crypto, in my opinion. But again, I mean, to each his own. And like, if you spend the time specifically on Forex, or, whatever your poison is, if you like options or if you like, you know, only foreign markets, or you like only, certain sector or whatever, by all means, like if that's what you're best at, go for it. But in my opinion, though, I mean, you really can't mess with crypto. And maybe one day, the truth is like, maybe one day when crypto gets real big and there's more regulations on it and all the market caps are like through the roof and it's harder to like ICO or whatever, maybe the volatility will kind of come out of it as the money comes in. And it won't be as appealing and there'll be something else coming along. But in a lot of ways, like it's like the penny stocks of trading. Like there's not a lot of things, there's not a lot of markets other than crypto where you're going to see things like what Doge did, where it's like 12,000% or something like that. Or a lot of these other cryptos, like even like 1,000%. You're not going to see that in most mature markets and everything. So as crypto matures, we're not going to see that in the same way. And who knows what's going to happen in the future too. Like, maybe all these markets collapse and go sideways for 30 years like Japanese stock market did. Like, I mean, I really don't know. And there's not enough time to like look back at these charts and see like, could the macro like uptrend on Bitcoin end after 12 years and it takes out like a previous low and goes into like a serious consolidation or like, whatever? For sure, it definitely could. We could see Bitcoin back at $1,000 at some point in time in the future. But right now, based on its like 12-year time period and its overall volatility and like, Bitcoin's the oldest crypto and obviously like the best performing asset in like a 12-year time period. If you look at something that's been around less time and it's gone more exponential, it's probably going to be more volatile. So like the younger coins that are priced lower, that have smaller market caps, typically will have more exponential moves as where like Bitcoin's been around a little longer. So it's become a little more of like the store of value. So it doesn't have as big a moves to the downside or to the upside. So, it becomes less desirable to trade, even though like the actual fundamental of it is probably better than like almost any other crypto you're going to see out there. So, in my opinion, overall, I think crypto and Bitcoin are the place to be, at least right now. And if that changes in the future, that might change for me and I might move along with it. But, it's the same as some people like literally trade bonds and been trading bonds forever. And that's all they trade. And that's totally cool. It's just, it's never really been my thing. And same with, it's everything, bonds, options, whatever else there is. I'd rather use like options or something like that as a hedge to my like regular positions as like the lottery ticket if something goes wrong, and just put like a small position on rather than, that's like, I don't even know, my bread and butter. But I mean, obviously, there's people out there who traded like options on, I don't even know, what's a good one? I mean, there was like obviously like GameStop options traders or Tesla option traders, that probably like crushed anyone else's gains in the entire markets over this bull run so far. GameStop especially, I think GameStop is like the overall best performing, like exponentially and most volatility of like any, big name stock. So the truth is the most money was probably in this whole run. The most money was probably in the most joke things like GameStop and Dogecoin were like probably the best two things to be involved with. Fundamentally wise, like you could argue like Tesla also, but that it still has like strong potential. But if you look at valuations, like, I mean, Tesla's like really just like a GameStop, really, in my opinion, or like a Dogecoin. You got to really go out there to argue the value is there on something like that. And, it could be like the Amazon back in the day where Amazon runs up, gets way overvalued, drops 90%, and then eventually is like back at all-time highs, just crushing it now. But, Amazon did lose 90% of its value. So could Tesla sell off from like $900 back to $100? I mean, probably not that low, but it's certainly possible. And then go on to be like the Amazon of, EV, like car industry, or like, whatnot. It 100% could. Is it likely? I don't think it's as likely, but who knows, man? If everything starts unwinding, we could see some crazy stuff in these markets. Like they look like the, bubble bursts of the .com era, etc. Same with the housing markets too. I mean, it's not unrealistic for me to think that the housing market could just go sideways for, a decade, or that it could have like a massive bubble pop scenario where basically like people can't afford houses, so house prices drop, so eventually people can buy houses again. But right now, there's no real explanation that there would be a housing bubble burst because I don't think most people who have bought a house are upside down on that house. And that was the main problem before is that people bought houses and then the price dropped substantially on those houses and they overpaid for them. So they were upside down. So they started like foreclosing on them. I don't think that's really the case right now. Like, especially with like the moratoriums and everything, I think the housing, market is more likely to just go like sideways, to have like a slight pullback. But until it's like a market that has like stop runs, until stop runs start getting hit, markets don't like really start capitulating. You don't see those massive like pullbacks. So in order for that to happen in housing, there would have to be like defaults on like the mortgage-backed securities or like massive like consumer defaults. And I think the majority of the buying that's been taking place like this whole year is like hedge funds and like family offices and like stuff like that. I think it's like large companies or conglomerates buying up, all this housing, because think about normally a bunch of money was going into like commercial real estate and less was going into residential on like the business side. And I think now there's no reason for people to buy into commercial because there's so much uncertainty. So a lot of these funds are investing in like, the residential, and that's driving up all these prices. Like that was the first thing that made me think when you hear about all these cash offers. Who puts in cash offers? Like crypto millionaires? Like that's what they're trying to like make you think, or like, rich people that are just buying a second home. That's not who puts in cash offers. Like typically cash offers are going to be like, family offices, hedge funds, like big corporations, like foreign investors. That's who I see who's competing for all this like residential housing right now. Because it's not like all of a sudden a bunch of people got kicked out of their houses and they're looking for new places. And it's not unrealistic to think that a bunch of people are moving out of big cities or buying a second house or third house or whatever. But, and that there's less houses on the market. But I just really don't think that this is like being driven by like consumers. I think this is extra buying coming in on top. That's all based on like cheap money from like corporations and stuff. Because I think like the majority of like people, yeah, maybe you're financing for a cheap rate or getting a lower rate or whatever. But overall, I think probably most people, unless they're buying like a 10th, 11th, 12th house or something like that, they're not like going out and just snagging up as many houses as they can get. And based on like the numbers we're seeing and everything like that, it just really makes me think that there's extra demand with a lack of supply. The same as like some of the other markets that we've been looking at where, it's really not necessarily like traditional inflation. Matter of fact, let's wrap up with this, talking about traditional inflation. We're obviously seeing a bunch of inflation, and I've talked about how overall I think we're in a macro deflationary environment, and I expect deflation over time if something doesn't change. The actual inflation would come if we start seeing wage inflation now, which would make me change my mind, because that's what causes prolonged actual inflation in real life. Because the people who spend the most and drive up the prices on like necessities are like your bottom tier people. So typically when we see all these prices going up in assets and investments and housing and all that, that's not the same people. That's not like the poor people or like the lower class people. Like those people who spend the most and have like the highest effect on like velocity of money, like they basically spend it as fast as they can get it. And the reason that stimulus checks like had such a good effect on the economy is because that's like sort of the trickle up economics thing where you give it to like the poor people and the poor people go out and spend it, as opposed to like middle class people invest it or put in the bank, or like rich corporations invest it or buy houses, etc. So the wage inflation, if we see like the minimum wage go to $15, or we see everybody just paying $15 all of a sudden instead of like 12 or 8 or 7 or whatever it is in your state, that's going to cause actual inflation over time, because then the lower dollar items, the necessities that everybody needs, like gas and bread and stuff like that, have to go up in price, like sugar, coffee, all the actual like commodities and everything have to go up in price to make up for like the tight margins that they're running, because now all of a sudden they have to pay people more money to do like these quote unquote, I don't want to say marginal jobs, but the ones that need like the least specialization or education. So That makes me think that if we do see actual wage inflation over time, and all of a sudden we start seeing all these wages going up, that will lead to prolonged, extended inflation in like everything. So, but I think that's where I'm going to wrap it up today, guys. We'll be back maybe with a update video on Tuesday, static video, but for sure on Wednesday for our regular stream at 8 p.m. from 8 p.m. till 10 p.m. Thank you, everybody, for tuning in today. Crypto Trend Trader with your Sunday weekly look ahead. Looking forward to this week. We are at resistance and support with a ton of these markets, and we could see massive amounts of volatility. But overall, I don't see any trend changes taking place right now, and I don't think we're going to see any. If that changes, I'll be on top of it for you guys. Appreciate all the likes, subscribes, comments, etc., all the positive feedback to everybody that tuned in today. God bless you as well, Bubblies. Appreciate it. Everybody have a good night. Crypto Trend Trader, and I'm out of here.